All right, everyone. So this is Meredith and Stacey, and we were just kind of, ruminating back in the days when, as we're in income tax compliance season, the days when really we were worried about the state income tax adjustment, bonus depreciation from a decoupling, non-federal conformity perspective. And then when kind of states started picking on intercompany transactions, that was a big deal. And now here we are. There's just like all of these changes. We kind of got our foothold on like tax reform and like what the states are doing with that. States have kind of created clarifications, based on tax reform that happened in 2017. But now we've got CARES Act and just our whole world out, like
Oh,
in addition to COVID, our whole income tax state compliance world has just like dropped a match in the dumpster and like walked away.
right. And don't forget PPP loans.
Yeah. So I guess, Stace, what we're seeing right now, right, is we've got from a CARES Act perspective that we're seeing big impact on states are the PPP loans, which the Fed has said they are not like you don't have to pick them up on income. And originally you weren't going to be able to take that expense. The feds have basically said you get loan forgiveness. It's just, it's in your books, you M it out for tax, and it's not there. We've
Correct. You don't
seen,
pay tax on it for a fact.
right. So we've seen California say, okay, we'll allow that loan forgiveness, but we're still not going to allow those deductions. So
Correct.
then that's an add back for California.
Right.
Illinois
And
said,
recently, actually, sorry to cut you off, but
no, you're good.
recently, I think I saw that maybe the Tax Foundation has a map of the states that have
Really?
coupled from it. Yeah.
Okay.
So we might want to put that out on our information. However, I wanted to look and see how they were treating Texas because since Texas isn't a net income based tax, I don't think that they addressed it on their map.
Right.
So I don't want anybody to rely on that. And maybe you can shed some light on what you saw when you were doing your research on that.
Yeah, and I think it's funny with Texas because I don't think Texas has formally said something, but I think the Texas society has made their interpretations, which is kind of a good cue of like, hey, we don't like the states haven't said anything, so how do you know? And then you're looking at this rolling conformity issue, which, Stacey, you and I were talking, it's like, yeah, no one used to really care, right? Because it like I remember when I was a younger staff, I was like, who cares? That's fine. Whatever you 168K, great, no bonus, cool. But now as these like things are happening really quickly, right around the corner, retroactively to when tax returns are due, you're like, well, you haven't said anything. What's my conformity? So if you're rolling conformity, you follow the IRC effective always, and you have to specifically decouple. If
Mm-hmm.
you follow it effective a date, then anything that happened to the IRC after that date doesn't matter.
Correct.
So that's then where PPP is in Texas came up. It's like their fixed conformity of 2007? I
Probably.
think when they went to the margin tax, which is then really interesting because the Texas statute specifically references lines in the federal return. But it's like my federal return says this, but you want me to prepare a federal return as of 13 years ago? Like,
Correct. Yep.
come on.
But that's the
Um,
reason why that, I mean, not to give everybody a history lesson, but that's the reason why we have bonus adjustments, for example, right? Is because maybe a state like Texas, right, that doesn't allow bonus for the cost of goods sold deduction, they have a fixed conformity, back to 2007 or 2008. And so that's why we have those adjustments in states like Texas. And so now, fast forward and we've got states where they're not addressing these, changes from a federal perspective just because they haven't maybe decided what they're going to do. So we're forced to look at the conformity dates as a guide as to what might the state, do, whether they conform or not, and then make some judgments based on that.
Right, which is exactly what we're having to do with the qualified improvement clarification that came out of CARES Act, which was a clarification of something that they missed in tax reform. So 39-year property for certain qualified improvements can now be 15, which then means you're subject to bonus depreciation. However, I know Colorado as a rolling conformity state typically has specifically decoupled from that like benefit of that clarification. So now you've got three books, right? You've got federal, you've got, hey, you've got 15-year, I'll adopt the conform, like the reclass of your asset life, but then you don't get bonus. But then you're like, oh, hey, we didn't even follow the reclass, and then we don't follow bonus. So you've got a 39-year asset still, and this giant difference between Fed and state. And so these are just things that we're seeing that you've got to track. And when do you ever get to recognize it? Because I don't know when you like dispose of a wall for, or you just have to wait the 39 years. Who knows? Like all of these things that we're really starting to think about that, we're trying to put pen to paper and get these numbers on returns. That's just like, there still hasn't been clarification. So we're just kind of hoping that our interpretation, because nothing has been said, we're putting the things on the return right.
Correct.
So
returns are due, we're doing this, in early March, and returns are due in, 15 days and a month from now,
right.
et cetera. So we don't have a lot of time to figure it out. And
right.
So we're hoping that by looking at the conformity dates and just some of the guidance that we do have, that taxpayers are getting it correct.
Right. And so everyone, as we learn, you learn, we'll keep you updated. Follow us at SALTovation, and we'll, continue ruminating on this and keep you up to date as much as we can. So thanks for stopping in and listening to us.